Cloud marketplaces have been on fire. They're growing at 86% compounded. So Canalys, we predicted $45 billion going through cloud marketplaces in a year and a half by 2025. That's a massive, growth from where we have been, starting at zero just a few years ago. And we're starting to now understand who and how this is all going to take place. About 80% of that is likely going to go through the top 20 marketplaces. Not top 20%, top 20 marketplaces.
Today's episode is brought to you by the Partner Insight newsletter, your weekly data-driven source on partner-led growth. What's the secret behind most successful partnerships and go-to-market strategies? Data and insights. And that's exactly what Partner Insight brings to your inbox every week. We give you the numbers, the trends, and the strategic insights straight from the partnership playbooks of top-performing tech companies. Join the community of thousands of partnership and go-to-market leaders who stay ahead of the curve with our newsletter. It's the knowledge and inspiration you need to help you build strong partnerships, grow in cloud marketplaces, and create a successful tech ecosystem.
Jay, excited to have you as part of our quarterly updates.
Thanks for having me again.
We chatted just a few months ago, but this technology space is moving so fast that it feels like maybe a year. So I would love us to talk today about a few things that you've been covering recently and to see deeper picture of technology ecosystem. So number one that I think would be great to cover today is cloud marketplaces. Number two, you just did research the entire technology market, which is 4.7 trillion, and you talking a lot about how services are driving this entire pie, right? This is number two, and number three. Obviously, there's no conversation today without AI. Let's maybe start with actually your overview of technology market, which you put at 4.7 trillion. Tell us a little bit more about what you see, what are the trends, and what are the things that you sort of maybe didn't expect to see that you discovered that.
So every year we look at the total addressable market in tech and telco. So that is 334 million businesses and governments around the world, and what they spend across hardware, software, and services. And so this year's number is 4.7 trillion. So we're going quickly. That number, by the way, technology is the fastest growing industry, and it's going to double in size this decade. So we'll be talking about north of a $9 trillion market inside of this decade. So lots of different changes. The one thing that rings true, though, is services make up 2/3 of the entire pie. So if you are in hardware or software, having a partnering strategy, having an ecosystem strategy is absolutely critical for success. The second thing is, of the entire pie, the 4.7 trillion, almost 3/4 of it, about 73%, goes to, through, and with partners. So the resale elements are still very high on who either sells or executes in every different part of the pie. So it's very large, it's very complex, but for every company out there that's trying to sell their wares, we have to have this partnering conversation.
The overview that you've done is really compelling, and it's interesting to see that technology stock kind of, now more than telecom services, which used to be the biggest pie. But I would love us to double click on services, because I think it's maybe not well understood space, right? At least by many people. You're saying that services drive 2/3 of the entire pie. Can you explain how it's happening, and maybe in the context of multiplier?
One of the biggest pieces of research, and the largest of large companies, have completely changed the language that they speak, to and with their partners. And I call this multiplier language as opposed to margin language. For 43 years, since August the 12th, 1981, in the introduction of the first PC, we've been talking about margins. Hey, this is what you make on the front end. This is what you make on the back end. If you do a deal registration, you make a little bit more. Here's your market development funds. Here's your spiffs. Here's your incentive. Here's how the deal works. But the whole theory was that you paid once to a partner at the point of sale. And the assumption in that payment, and that could be 10%, 20%, 30%, 40%, 50%. I mean, different markets dictate different margins. But the fact of the matter is you're paying a big chunk of money with the assumption that maybe that partner helped that customer along the way make a decision in your favor. You've done the work and taken the customer's money and done all the collections and transfer of title and things like that. And then hopefully you stick around and get that customer to rebuy that product sometime in the future. Well, as we started down this road 20 years ago of subscription and consumption models, everything kind of changed where the actual point of sale is the first 30 days with the customer. And so that got a lot of companies thinking is, we're really paying once, but we're assuming all these points of value, but we don't really measure, monitor, or manage these points of value. So what if there was a way in the future that we could look at the 28 moments before our customer makes a decision in our favor or against us? What if there was a way during the point of sale? And again, it doesn't matter if the partner collects the money, if it goes through a marketplace, which we'll talk about, if it goes direct, it really doesn't matter. We got to sign on the customer. So we got to get the customer to the dance. We got to get them on the dance floor. And now in this subscription model, we got to re-earn their trust every 30 days. So of all the implementations and the integrations and all the compliance work and everything that goes on, the managed services that go on forever, we need to upsell, we need to cross-sell, we need to enrich these contracts. This customer for life has a different partner journey, has a different partner economics than just paying at the point of sale. So what if I could spread out all those payments, all the incentives, but pay out, more at that point of value than the point of sale? And you start to, look at what the future economics. And you have, by the way, all the tech alliance partners as well, co-innovation, co-development partners, strategic alliances, business alliances. So there's 6 different swim lanes of partner value coming in at each of the 3 different parts of the customer journey. And what if we had the, technology and the processes and the workflows and the logic and everything else to be able to do this at scale? This would change everything. And we're right in the middle of this now. Since the last time we talked, Microsoft had put out a point system, but companies like VMware and HP and others have done it since the last time we talked. So everyone seems to be in this mode now of shifting to recognize partners at the point of value instead of the point of sale. This is critical for services because the services they're doing, the consulting, the design, the architecture, the implementation, the integration, the security, the compliance, the continuity, there's hundreds of services that wrap around a product, and those, a hardware or software product, and those services are absolutely critical in terms of whether you're successful as a vendor. And so if you can recognize those services and how large those services are. In hyperscalers, for example, if you sell AWS, there's $6.40 available as a multiplier wrapped into every dollar of AWS consumption. If you sell SaaS, there's $6.19 around Salesforce. There's $5.80 at HubSpot. So in every category now of that 4.7 trillion, we're starting to see the biggest vendors starting to change their language and recognize, monitor, measure, and manage partners better than just how much did you sell for me last week.
I agree that is like really compelling change. So just so I understand correctly, you're saying that as we moved into sort of subscription products and subscription economy, the services become more and more important because they drive the value across the value chain, right?
Yeah, and that's how your partner is interacting with your customer. And by the way, the average mid-size or larger customer has 7 partners they trust. So it's 3-dimensional chess here on who is supporting the customer during the different phases, before, during, and after the procurement of the technology. And what are they doing to add value and drive outcomes for that customer? And inside of that, that is going to be your success as a vendor to make sure you're in those conversations and you're being successfully deployed.
This is like a really good segue for our next section about cloud marketplaces, because I think a lot of happening in clouds with these cloud providers. Microsoft just announced a new set of AI services. They previewed 2.5 trillion partner opportunity, right? Satya Nadella talked about it in a very compelling way. And then Google Cloud is also sort of catching up with kind of getting second consecutive profitable quarter. So I would love to ask you, what do you see, sort of, what are the sort of main trends that you see in clouds, hyperscalers through the lens of partners?
First of all, cloud marketplaces have been on fire. They're growing at 86% compounded. So Canalys, we predicted $45 billion going through cloud marketplaces in a year and a half by 2025. And so that's a massive, growth from where we have been, starting at zero just a few years ago. And we're starting to now understand who and how this is all going to take place. About 80% of that is likely going to go through the top 20 marketplaces. Not top 20%, top 20 marketplaces. So we know AWS and Microsoft and Google. We know, Salesforce, HubSpot, ServiceNow, Workday, Marketo, NetSuite on the SaaS side. We know more on the traditional side, the IBM Red Hats, the SAPs and Oracles. We obviously know that, Dell and Cisco and others will have marketplace activity. So there's about 20 marketplaces that will drive about 80% of that $45 billion number. There are 6 layers of competition for the other 20%. So the major distributors are investing billions of dollars building out their digital platforms. These are the TD SYNNEXes and the Ingrams Ingram made a ton of acquisitions over the last 10 years around Ingram, Cloud Blue, etc. But everybody down the line, Arrow, D&H, everybody's making announcements, big announcements around cloud marketplaces. The next layer is you've got the tech solution brokers, which are the old master agents in the telco world. 25 of the majors have consolidated down to 4, and they're investing heavily in this. You've got the aggregators, very large resellers that own customer relationships like CDW and Insight and CompuCenter, investing billions in digital infrastructure to do this. You got marketplace development firms, which are companies that build white labeled marketplaces, building out catalogs. So companies like AppDirect, Miracle, companies like Marketplacer, Cloud Blue would fit into that category. Vendasta in Canada would fit into that category. So there's hundreds of companies building these white labeled marketplaces. So again, there's lots of competition. We got a true cloud distribution layer. Companies, the fastest growing distributor in the world is Pax8, and they're building out a federated marketplace that connects buyers to partners to distributors. And obviously there's over 100 companies like Pax8 around the world developing these as well. So all kinds of activity happening to get this surge of marketplace activity, which we think is going to be not only significant with the numbers I just gave, but material over the course of the next decade in terms of every company's target addressable and serviceable, obtainable markets.
No, it's really compelling what you're saying, is because it seems that B2B market is changing the way the value is delivered to customer, right? And marketplaces are becoming almost like a dominant model to do that. And I think obviously there's a question of like services, because like all these marketplaces started with the idea is going to be like direct transaction to customer, but then they realize it's going to be services, is it going to be partners involved. I think in one of your talks you mentioned that 24% of transactions are clicked by partners, right, in cloud marketplaces that you've seen. So I'm curious in terms of key trends for partners and also sort of for vendors, like how would you shift your thinking from where we've been a couple of months ago to today? How would you start thinking differently?
Yeah, I would start thinking in layers if I'm a vendor, obviously if I'm a partner, and this is the way customers are already thinking. In less than 2 years, the majority buyer of that 4.7 trillion will be a millennial. These are iPad kids, digital first, very open to digital technologies like marketplaces, but they also buy 7 layers of everything they buy. So $1 of consumption through the hyperscalers on average is 7 transacted layers on top of it. It needs to be secured, it needs to be compliant, it needs to be backed up. Now there's generative AI layer on top of it. So the average deal on one of those marketplaces is 7 layers. On a SaaS deal, any of those companies I mentioned, the average app exchange deal today is 7 layers. The average security deal today, going to Zero Trust or SASE, is 7 layers. This magic number of 7, I mentioned 7 partners are trusted. in and around the customer. So we're going with this magic number of 7 layers. So I remind people that you don't buy subscriptions and consumption models. Like you don't buy Netflix from the cable guy in the white van. You buy it on a digital subscription. And it makes sense to procure and provision 7 layers in one place. You add a user, you click a button. And so who's clicking the button? You mentioned the 24%. Of all this activity, is $45 billion in a year and a half that's going through marketplaces. 24% of the deals are partners clicking buy on behalf of the customer. So this is why it's important to my earlier comment about points of value. They're not the reseller of record, so they don't get the margin for doing that. So why would they ever do that? Well, it's important because they may have done the configuring, the pricing, the quoting. They may have done the design and architecture. They got the customer to the 7 layers. It makes sense that they go in and build that and click buy on behalf of the customer. So if I'm a vendor and I'm one of those 7 layers that's getting selected, I should be recognizing that partner for clicking the mouse, not maybe at the resell level, but at least something quantitative that they should be earning for choosing me as one of those 7 layers.
Orchestrator or like influencer even, right? That's really, really compelling. Let's talk about AI, and AI is changing picture pretty dramatically. Like every day we see some compelling updates about AI. Microsoft grew 46% year to date. I think among other things, AI is driving that. Google is doubling down on AI. How do you see AI is influencing dynamic VS partners and also with cloud marketplaces?
Yeah, we're going through obviously a major hype cycle in generative AI. And I'll say that, this is like other hype cycles we've been through on other emerging technologies in the past. And I'll remind people that 10 years ago, we were going through the same kind of hoopla around Internet of Things. But as it played out, Internet of Things, was a really important part for several industries and for several partners. But if you look backwards, the entire channel, the entire set of partnerships, over my shoulder, there's 20 different kinds of partners, did not win in Internet of Things equally. And there's whole cohorts of partners, business models that didn't really play at all. And this is going to be the thing with generative AI. Right now, it's a $15 billion services opportunity, but generative AI is not a SKU. It's not a product. You're seeing everyday announcements of it being embedded in all the major business applications. It's being embedded, obviously, in the infrastructure and everything else. So every company is lining up to embed Gen AI, which means it can't be sold as a standalone. So right there, 470,000 resellers, kind of don't have a SKU to sell. And now the question is, once it becomes embedded, are these companies going to be successful? Like I'll pick on Salesforce, Einstein GPT, they want to charge you for, in addition to your CRM license. Are they going to be successful 5 or 10 years from now, continuing to charge for it? Or is it just going to slip into the main product, part of the main price? And I would say the latter is probably more likely. It will turn into a feature and function of every other piece of hardware and software. So now, to the partnering part of it, you start to think, what are the services it generates? There's a ton of them. Obviously, the consulting, design, architecture, implementation, integration, all the things I talk about often. But guess what? It's not going to be everyone doing this. If the generative AI is built into a marketing platform like Marketo, Eloqua, Pardot, HubSpot, it's probably going to be at the digital agency, thinking through generative AI, content creation, and how these automated bots are going to work within the marketing strategy and marketing framework. The VAR or managed service provider is probably not walking into that conversation. Even the system integrators probably not at that conversation because they're more working with the CIO to make sure that it is secure, make sure it's compliant, make sure it's, the processing, compute, and storage is happening in the most cost-efficient way. And it's different for everybody. But right now, in the early years of generative AI, the global system integrators are going to win. And the ISVs, the 200,000 ISV SaaS companies, are going to win. The emerging tech companies, 800,000 of them, are going to win because it's absolutely a new turn in the technology crank. and it gives them new lease to go talk to customers and upsell, cross-sell, enrich around generative AI. But if you're a services company and you're doing managed services, very difficult in the next couple of years to build a managed service around a large language model. If you're a VAR, like I said, there's nothing to sell. If you're kind of in the broader set of partners out there, it's going to be very selective of who the winners are. And so we know the winners, we know the professional services companies that are industry-based, like the digital agencies, like the accountants, like the lawyers. They're going to win partially in the middle. And then, maybe some of the more traditional channel, that Microsoft channel from the 80s, 90s, and 2000s, probably doesn't have a huge generative AI opportunity in the first, 2 or 3 years that I can see.
Fascinating dynamic, frankly, and I'm trying to wrap my own head around that. And I found that compelling that 80% of customers in GQ research are asking for Gen AI capability in the product, right? So it's like a ticket. And to your point, I think I agree with you generally, but I feel that for SaaS companies, it's pretty difficult to build like a meaningful Gen AI capability in the product unless you sort of integrate with some of big language models. But then it becomes less differentiated, I should say.
You said the key word, which is integrate. So now we're all facing, every industry, every part of SaaS, every part of this industry is facing an integration first buyer. This is the same buyer, for example. 91% of people won't buy a car today unless it has Apple CarPlay or Android Auto. This is the same thing kind of leaking into the tech space, where I used to have criteria around service and support and price and all the things. What is number one in criteria for every buyer, especially this millennial buyer, is integration. So if you are that SaaS company, you're one of those 7 layers, I'm going to be asking you questions about not how friendly your API is, which is table stakes today, but how you can transfer data in real time into the LLM, the large language model that we're creating around the platform. So for a sales buyer, to work with the CRM, for the marketing buyer to work with the marketing automation, but there's 11,039 ISVs on the MarTech and AdTech stack. I'm going to be asking every single one of those in my own 7-layer solution to go and make sure that the data in real time is being fed into our Gen AI engine so that the system is learning and it's customizing and it's getting better on a minute-by-minute basis. So I want to make sure that whatever you're doing, whatever workflow you solve or business logic you're pushing forward, and whatever processes that fit within your software, that I can get access to the data quickly and make sure that our chatbots, make sure that our RPA engines, everything else in our company has access to what you're doing as a SaaS company, as part of the stack. And that's the fun part. And this is the integration first buyer. Those are the conversations that are ready to have right now. And 1 + 1 = 3 if you can get this data lake, this data warehouse built, for OpenAI or Bard or any of the the GPTs out there to go and scour and learn and consume at scale.
AI is creating a new value chain, effectively, right? And it's becoming like a bottleneck, like a hoop. Everyone needs to jump through this AI hoop, like through this value chain, like partnership perspective. Who do you think is controlling this bottleneck now?
I don't see it as a bottleneck, but like everything in the last 10 or 20 years, the big tech companies, trillion-dollar valued companies, are controlling the future of generative AI at this point. Microsoft's investments in OpenAI, obviously Google and Amazon's work in this space, and then all through the largest SaaS companies and traditional companies. Like I worked for IBM for 17 years, including Lenovo, and in my first few years in the job, we defeated Garry Kasparov at chess. That was blunt force compute to go win at chess against a grandmaster. But winning at Jeopardy was more of a generative AI model. Alex Trebek asked a question, you've got milliseconds to go kind of read the internet cover to cover and come back with a probability number of whether you should press the button or not to answer the question. If it's above that number, you press the button. If it's below the number, you don't. Once you press the button and you win, and Alex acknowledges you as winning the buzzer, you get about 5 or 6 more seconds to go consume it. Once you've read the internet cover to cover, you now have to understand it enough to hit that probability of getting the right answer. So winning Jeopardy was kind of the first step of generative AI, of what we're seeing today, of not only being able to do something extremely quick, like a Google search, but then being able to come back and win at a very human-based show or based competition. And so now from there, I mean, that was over a decade ago. And now you see this, Watson has a big part of this, and the work that SAP and Oracle and then the traditionals, the Dells, the HPs, the Ciscos, everybody's working on this. And that's why it's such a turn in the technology crank that that customers are interested in. And it's such a consumer trend as well, that we all think Skynet is being turned on, and this is the first part of Terminator, and the sci-fi people and conspiracy theorists are loving this as well. So it's exciting to be part of this.
Thank you so much. I think it's so much fun, and then fear at the same time, like around this AI. Like, look, I learned a lot myself today. Thank you so much for your quarterly updates. My super last quick question: when we get together in 3 months, what do you think going to be the main theme around these partnerships, hyperscalers, AI thing?
Yeah, I think it's going to be an acceleration. We're going to know a lot more about Gen AI, as I talked about, by partner type and by what services can actually be pulled from it. We're going to learn more about marketplace activity and their growth as we hit these magic numbers. So each of these trends continues on. In 3 months, I think we're going to be talking more about the economy. Either we settle this pre-recessionary, or we dig in lower. So right now it's kind of 50-50 odds of how we finish the year in 2023. And everybody is hopeful and optimistic in terms of our surveys. Partners are investing more in marketing, they're investing more in hiring. Even as big tech has laid off 500,000 people, the average partner is still hiring. So the tech industry took the world out of recession in 2008 and 2001. The world isn't in full recession right now, but the tech industry is trying to stop the recession and pull the world out and be at the tip of the arrow. So it's exciting to hear the optimism from partners, 1 million partners around the world, and how they think about not only finishing this year, but going into next year. We'll have much more to say 3 months from now.
Great, hopeful message to wrap up our quarterly update today. Thank you so much. If you guys who listening this don't follow Jay, please do. He's like the best analyst in partnerships and channel and ecosystem globally. Jay, I look forward to having another conversation in 3 months.
Thanks so much.